The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Anna Christina from Perla. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you.
Welcome to the Get Rich Slow Club podcast,
where we take you from beginner to confident investor.
where we can teach you everything you need to know about investing.
So come get rich slow with us.
Hello and welcome back. Today I have Kobe with me from Finance with Kobe. Do you want to tell everyone a little bit about yourself?
Well, thanks for having me for starters. I am a mortgage broker based in Melbourne, but I can help people all over Australia. I help predominantly first home buyers and also family home buyers, and I'm all about making finance fun, simple and accessible for all.
Amazing. And I love your green branding.
Thank you.
It's so fun. You've had like a really interesting career journey. So
I have.
a property advocate or something beforehand?
Yeah, I was a buyer's advocate for a few years and then went into the finance space last year, and it's gone very fast, and now I'm here.
And what were you studying before? I remember you doing something random.
Yeah, I was an osteo before that.
Yeah.
Or studied 3 years of it, yeah.
Crazy. Big journey. I love the whole like healthcare to finance vibe.
It happens more often than you think.
Yeah. They're good at explaining things.
Yeah, absolutely.
Amazing. We're going to talk about like the first home buyer's guide and what people kind of need when they go to see a mortgage broker for the first time. But before we do that, what is your money win or loss for today?
Oh, money win. We found out, I got an email over the weekend that we're getting 2 weeks of rent refunded when we move in a few weeks.
Oh, refunded?
Yeah.
Why?
Well, we're month by month, and because we're ending it early, they were like, yeah, we'll give you 2 weeks back.
Oh,
I was like, done. I'll take
so
that.
Nice.
Yeah.
Did they have to do that?
No. No.
Amazing.
I was expecting we'd have like a big crossover, and they're like, no, we'll give you 2 weeks back.
So landlords can be nice.
Yeah. Absolutely. Yeah.
Amazing. That's so good. My money win is less exciting. But I've been loving, is it Uber One or Uber Pass, the membership?
Pass.
Uber Pass?
Yeah.
I don't know why I've got Uber One in my mind.
Yeah.
But there was 10% off Ubers, which is great.
Oh,
and then I had like a $5 credit as well. So my Uber this morning cost me $5. Yeah, it was only 10 minutes down the road, but it was
That
raining.
is a money win.
Yeah.
Yeah.
Big win.
That's so good.
So have you bought your own property?
Yes. A few years ago, we bought land and built a house.
Oh, so cool.
Yeah.
How did you find the process of seeing a mortgage broker for that?
It was good. I actually went through my friend. I'll give a shout out to Evelyn from Evelyn Finance.
Oh, I've seen her all over social media.
Yeah, she is on there. So we did that in 2021. We bought that land, and then it titled 2022, built on it, lived in it and sold it.
Did you know much about the whole buying process before you did that?
I did, only because I was a buyer's advocate at the time. In saying that, we bought untitled land, which was not something I had dealt with.
What is
so it's
untitled
slightly
land?
different. So we'd bought land in an estate, and untitled means that they had like begun the development, but it wasn't ready to be built on, and it hadn't been like properly subdivided or titled with the council.
Interesting. How do you title land?
Great question. I have no idea. I know it's a council thing, and I know like from the finance side now, like how we do finance, it has to be titled, but yeah.
How did you go about that then? Did you have someone who helped you title it?
No, that was all done through the developer, and it was like so delayed, and I'm sure people listening who have bought land, they would totally understand. We weren't delayed too bad, but I've heard of people delayed like 12 months, 18 months, and it just goes on and there's nothing you can do about it.
Yeah, not ideal.
No.
But I'm glad it all worked out for you.
Yes, it did.
When I first saw a mortgage broker, I didn't really know too much about the industry, and my experience wasn't very positive.
Okay.
I had a lot of people who were like, oh, you're very young. Maybe you shouldn't fix your mortgage. Like a lot of them weren't very helpful either. What should we be looking for in a mortgage broker?
I think you need to find someone that cares and is like genuinely interested in your journey and wants the best for you. A conversation I have a lot with clients at the moment has been about just because a bank will lend you a certain amount doesn't mean you should.
Yes.
And I'm a huge believer in that. Like, you know, you could turn around and say, oh yeah, you can borrow 700 grand. But if you're looking at the repayments on that, how that fits in with your lifestyle, or like comparing it to like what you're paying currently in rent, it's a huge difference. And at the moment, banks, they're actually lending quite a bit of money. And I do say to clients, like, I don't think you should do that.
No, especially if you're living in the house or the property as well, then like you don't have any money left over for anything else.
Yeah. And if you want to keep saving and have an emergency fund and have a life and just like do anything besides eat beans on toast at home, like Yeah.
Don't borrow the full amount.
Yeah, absolutely.
Are you allowed to give advice like that? Like that's what mortgage brokers can do?
Yeah, we can say like, this is what you can borrow and have an opinion on it because we care.
Yeah,
That's
amazing.
probably a big thing. Yeah.
So you can give advice on mortgages, but not on other things?
Correct. Yeah. So we're not financial advisors. So
Yeah.
I couldn't tell someone about like a high interest savings account or getting credit cards. Whilst we can provide people with credit cards with their loan, we can't actually give like advice surrounding that.
Okay, interesting.
Yeah.
I want to ask you about offsets and redraws because that's big on TikTok, but
Yes.
maybe in a little bit.
Yep.
Let's talk through the process of how someone who wants to buy a house for the first time, they
Yep.
want to go see a mortgage broker. What's the first kind of step to go see you?
For me personally, I get everyone to fill in a contact form on my website and it gives quite a breakdown of where they're at with their journey and when they're ready to buy. And I think that's important, me knowing that information prior going to the call, just so I can prepare the right things as well. And I also ask in my contact form what type of finance they need help with. So it's a home loan, asset finance, debt consolidation, if they're refinancing, just like little questions that help me to, have the right information ready. Once everyone's filled that in, I then reach out and book in a call with them and I have a really in-depth discovery call. I say it goes for 15 minutes, but I definitely talk for longer than that with everyone. Really like nutting out people's financial position, future plans, making sure I've got like the whole gist of it before requesting some extra information and then work out their borrowing capacity.
Amazing. What kind of questions do you ask people?
We talk a lot about their income, their jobs, debts that they have, like consumer debt, student loans. What else do we discuss? Yeah, future plans. Like, is this going to be a 2-year property? Is this going to be like a 10-year property? It can be anything to do with all of their financial position. And then for first home buyers, we discuss all the different schemes and grants depending on the states.
There are so many ones.
Yeah.
What are some of the ones you commonly see?
The most common would be the first home guarantee scheme. That's
First
the 5%.
home guarantee.
Yeah, deposit. That's also in line with the family home guarantee. Which,
I heard that's a different one as well.
Yeah. Similar, entering with a 2% deposit instead.
Crazy, yeah.
Yeah. So whilst like people can enter with a smaller deposit, one thing to think of is you still need to have the borrowing to buy. And I think people think, oh yeah, great, like I've got 5%, but they actually need to have the income to support that too.
Yeah, and you don't want to get trapped with such a big mortgage and not being able to refinance 100%, as well.
Yes.
Yeah. Do you have to stay with the same bank if you've got one of those low deposit schemes?
Yeah, so with the scheme, you have to stay with them until the value has gone up, or if you want to refinance and either pay lender's mortgage insurance if it's not at 80% loan to value ratio, or, depending on like, if you're a teacher, there's some that you could refinance out at 90% or an accountant or a few different professions. But otherwise, you're stuck with them for a few years.
So let's say someone wants to buy a property. It's $500,000. They only want to put down a 5% deposit, which is $25,000. Maths. Yep. So that would be what's the LVR loan?
So when you're using this example, so $25,000 would be a 5% deposit. When you're looking at the overall scheme of it, with your loan to value ratio, it's just what percentage of the value of the property is your loan. So in this instance, it would be a 95% loan to value ratio using a 5% deposit.
Okay. And do you get cheaper rates if you've got like an 80% or an 80% LVR? Is that what people say? Yeah.
Yeah. So in general, if it would be a 20% deposit would give you like standard interest rates. But if you're purchasing under the scheme, so the first home guarantee scheme or the family home guarantee scheme, you're actually accessing interest rates as if you were purchasing with a 20% deposit.
Oh, so it's the government guaranteeing those ones?
Yes. And they're paying the lender's mortgage insurance.
Oh, they're paying it?
Yeah. Well, they're covering it for you.
Interesting. Yeah. That's cool.
Yeah, it's a great scheme. I used it 3 years ago when it was called the First Home Loan Deposit Scheme, but it's the same.
There's so many names.
I know, and it changes all the time.
Yeah, First Home Super Saver Scheme. We've done an episode on that, so everyone can go listen to that. I think that's such a good scheme. I bought my property a bit randomly, so I wasn't prepared, but I wish I'd used that one.
Me too.
Such a hack, but they make it so confusing.
There's not a lot of like easy information about it, and that's not something I can advise on like for people either.
Yeah. Well, we did an episode on it and that was so hard to write, just trying to filter through and being like, why is no one explaining it?
Yeah.
And trying not to make it confusing.
Yeah.
But I think we did an okay job.
Yeah.
So the first home guarantee scheme, I think there's like a home guarantee scheme. How is that different?
So the home guarantee scheme is like the overarching name, and then the first one comes underneath it and the family.
Okay.
So it's all.
And the first home buyer's deposit, first home buyer's grant?
First home owner grant.
Yeah, okay.
Yeah. So that is a state by state scheme, and it's a different value depending on what state you're in. But the grant is only available if you're buying land and building a property, or if you are buying a brand new property that's never been lived in. So for example, Melbourne or Victoria, it's a $10,000 cash grant, and then Queensland is $30,000.
Really? That's huge.
It's huge.
Wow. Crazy. Yeah, I got the 10,000 in WA a few years ago because my apartment had never been lived in before. So that was fun. But I feel a lot of people get really caught up on trying to get the grants when it's not the best idea.
Yes, agreed. Like if you can buy without it, or if you're buying, an established property, which I would say most people do, like it's $10,000. It's not.
Like it's a lot when it's just $10,000 when you're looking at like a $600,000 property. It's such a small percentage of it.
Yes, correct.
And there's so many issues with building new.
Yes. It takes a long time. We built and we used quite a well-known volume builder, is what they considered, where they've got the floor plans and you can change them a little bit, but not like totally customize them. Yeah. And the delays that we had, and it didn't help that we built in COVID, and it was just there was just a lot going on at the time. So our house was ready for 3 months before we were able to move in.
Oh, wow.
Yeah.
That's a lot of money.
It was so frustrating. Yeah.
You're paying your mortgage as well?
The whole time, rent and mortgage.
While you were building as well? Yeah, I think that's kind of missed out of the conversation a lot of the time. Is like, oh yeah, 10 grand is cool, but if you're paying the mortgage while you're waiting for it to be built the whole time, that adds up really quickly.
Yeah. So we were paying, we had a loan split with us. So we were paying our principal and interest, so our full mortgage repayments on the land portion. And then we were paying interest only on the build portion as like the progress payments went on. But towards the end of it, it was basically the full mortgage.
Yeah, while you're paying rent.
Yeah.
Yeah.
Yeah. And for 3 months it sat there.
Yeah. And
it's so frustrating.
New things as well have so many problems, I found. Like there was the warranty, but I feel like food builders don't really want to talk to you a lot of the time. Like I had leaks through my wall and I was trying to call them and they were just ignoring me for ages. And I had to threaten to complain to whatever the industry was, and they finally fixed it. But I feel like it was just such a headache for a while.
Absolutely. And this stuff that they can somehow get away with. If you're listening to this and wanting to build or are building, definitely get an independent building inspector to come through at every stage. They write a report. You provide that report to your builder, and then it has to be rectified by the time they start building the next stage.
Okay. How many stages are there?
Normally 5, just depends on the lender, but they are worth every cent. I think we paid, this was a few years ago, about $1,200, and they came through 4 times.
Okay, so
and then they did defects with us.
Total.
Yeah.
Oh, okay.
Might be a little bit more now. I'm not sure, to be honest, but it was so worth it. The stuff they picked up on.
Fine. Yeah, especially defects as well. That's like stressful trying to find all of those yourself.
Absolutely. And even like my partner, he's in the building industry. It was nice to have someone else just do it for us and do the report, and we presented that, and then it had to be fixed.
Kind of a bit different, but I've been loving involving professionals. I used to think I could do it all myself, but I've got a bookkeeper now and he's been life-changing. Like having a mortgage broker is great for so many people. I'm going to use a buyer's advocate next time I buy.
Absolutely.
They just seem worth the money when you find someone good.
Absolutely.
Yeah. And you don't want to be caught up with a property that's falling apart and you haven't gotten it fixed under warranty.
No. You need a really good conveyancer on your side as well.
Conveyancer?
Yes.
Is that also like a solicitor?
Solicitor, yeah. I have this great conveyancer that I refer all my Melbourne clients to, and she just saved my clients from this horrendous home that had just been renovated, and it turns out it was done all illegally, and the stumps were wrong, and there was asbestos and termites and major electrical hazards and all these things, and they got their deposit back and it was all sorted and fine, but she was fantastic. And
when do you involve a solicitor?
I always introduce my clients once I get pre-approval to a conveyancer or a solicitor, but it's preferential from your broker when they want to get someone involved.
Okay, so we've seen a broker, we've got a solicitor. Who else are we involving?
Building and pest inspector.
Okay.
Also need a good one.
Yeah.
In Victoria, I'm not sure about other states, but they have to be a licensed builder to actually be able to pull out on any contract. So if you purchase subject to building and pest, for example, they have to be a registered builder to actually be able to pull out of that clause if anything major has been found.
Okay. Building and pest. Is there any other professionals?
Ooh.
I guess I have a good accountant if you're buying an investment.
An accountant,
property.
yeah.
I think that's everyone.
That's probably everyone.
And I guess if you're choosing a buyer's agent, advocate.
Yes.
Yeah.
Yeah, absolutely.
So we've got, someone's done a discovery call with you.
Yeah.
You've got all their information.
Yeah.
Do you do their borrowing capacity?
I absolutely do. That would be my next step from a discovery call. I go quite in depth and do multiple lenders and give them quite a range because every lender is so different, particularly in the scheme. There's only, I think there's 35 participating lenders. And so everyone's got quite a range. But I provide that. I also give a really big rundown on like what it costs to buy a home. So, we talk about purchase costs. So other general things, say it's around $5,000. It could be covering your conveyances, mortgage transfer fees, registration fees, a few things like that. I also talk about
like rates.
Yes, we talk about,
that was surprised.
Yes, absolutely. We talk about rates, sewerage and water rates. People don't realize that that's an extra cost compared to if you're renting, you're only paying for water usage. What else do we talk about? Building insurance, contents insurance, just like a general figure, just so people can be aware of like the extra fees that they have to pay. And so that's all included in my borrowing capacity email.
Amazing. That's like going above and beyond. I feel like I haven't seen that before.
Yeah.
Amazing.
Something different. Yeah.
What's like a rough number that you've seen come up for all of those extra costs?
Oh,
I know it varies so much, but
it's hard to say because particularly rates, they're council and value dependent. I would say we budget around $2,000 a year for first home buyers, particularly if they're buying like a unit or an apartment. And then if they're buying a strata property, body corporate fees, that could be anywhere from like $50 to $500 a month, depending on the complex that they're buying into. Water and sewage rates, we say about $120 a month. Energy and gas for people, like particularly a lot of people I work with, they still live at home. They don't have any concept of like what these things cost.
Yes.
That could be a couple $100s a month. I mean, this month my gas at home's been like $300.
Oh, wow.
It's been a lot, but I work from home and have the heater on a little bit. Yeah.
And Melbourne's so cold.
Yes. So we talk about like the range of what those things could cost. But body corporate's been quite topical recently because body corporate fees actually impact your borrowing capacity.
Oh, interesting. Like that makes sense, but I wouldn't have thought of that.
Yeah.
Crazy.
So if you're looking at something that has say a $200 a month body corporate fee, that like impacts you by about 20 to 30 grand with your borrowing.
Wow.
Yeah.
Crazy.
Yeah.
Yeah. I feel like with HEX debt as well, it doesn't feel like that large of an amount, but then it impacts your borrowing in a large way.
It does.
Do you know off the top of your head if I've got like a 10 or 20 grand HEX debt, the impact of that?
So it's like the overall amount affects something called your debt to income ratio, but it's more about the repayments that you're paying monthly or that comes out of your pay that affects your borrowing more so.
Yeah.
Yeah. So often the more people earn, the more they're paying off.
Yeah.
At a time. So that affects it quite a bit. Yeah.
Yeah. Crazy.
Yeah.
My strata fees are like, they've just gone up to $600 a quarter, which is pretty good compared to some of the ones I hear.
What's that? 200-ish
a month? Yeah.
A month. Yeah.
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 And my rates are like $1,600 a year. I think my water rates are like $150 every 2 months.
Yeah.
Yeah. And that seems like pretty standard for Perth. But yeah, definitely like lots of extra things because I was like, oh, my mortgage is so cheap and my rent is covering lots more than that. But then when you add up everything else. And the cost of a property manager too, like that takes out a huge chunk as well.
Yeah.
And they charge for so many extra things. It's like an admin fee and a postage fee and a telephone fee.
Do you pay them a fixed fee or a percentage of your rent?
Percentage.
Yeah.
Yeah, I think it was like 5% or something, but then they add on admin fees and stuff.
Oh, yeah.
Yeah, and inspection fees. It's like a $50 inspection fee. Yeah.
Yeah.
Lots of things.
Oh, yeah. Body corporate's an interesting one, though, and I do say to clients, like, if you're considering buying a property that is part of a body corporate, whilst it is expensive, that then covers, like, building insurance.
Yes.
So you don't necessarily have that extra cost as well. So it kind of evens out a little bit, but then if you're buying a house, without a body corporate and paying building insurance, it doesn't affect your borrowing capacity. So there's like
pros and cons.
Yeah, pros and cons to both.
Yeah, my landlord insurance is quite cheap. It's only $300 a year because it's an apartment. Yeah. And then I was looking at houses in the same area and that was like almost $2,000. Yeah. And I guess because like you're not paying for the building insurance too, it's just like, what can they really do?
Yes. Yeah. It's just in case.
So many extra costs.
Yeah. So many. But yes, I do put all of that in my borrowing capacity.
Okay. So we've got a borrowing capacity. We know how much we can borrow. We know how much everything else is going to cost us. We go and find a property and then we come back to you and we say, hey.
No, ideally I would get pre-approval before clients do that.
I didn't do this.
Okay. You don't have to.
Yeah. I think it's a good
People
idea.
might say that you do, but you don't have to. I just recommend doing it.
Especially with like it being so competitive as well at the moment. You want to be able to be like, hey, I'm actually allowed to.
Yeah, a lot of agents, clients have been saying recently that they've been asking for a copy of their pre-approval.
Really?
Yeah.
Would you give this to a real estate agent? Is that not confidential?
I don't know.
Interesting.
I think you could show them. I wouldn't send it. I personally wouldn't send like a letter saying like I'm pre-approved. You could show them.
Yeah.
But I actually don't know.
That's so interesting. That feels like a step too far, but I don't know because I borrowed in a very different time.
Yeah, I'm not sure.
I'll have to follow up on that one. That's interesting. Yeah,
I know. A few people have said that recently. I'm like,
Because if there's no like, what's the privacy clauses around you sending a random real estate agent, that kind of stuff, like you've not signed like a client letter or anything with them. Yeah. Okay. Let's be mindful of that one.
We will. Absolutely.
Okay. Pre-approval. Do you need to like pretty much go through the whole process to get pre-approval, like get all the documents and everything you need, or have you got those already from?
So I've got most of the documents. I would have already requested ID documents, pay slips, and something called a fact find, which talks about like assets, liabilities, monthly expenses, things like that. I would then need to request your bank statements, and I don't do this to judge you. Whilst we have to look through them, make sure nothing dodgy is going on, or make sure like your expenses all make sense and add up. And we also would need to see bank statements to actually show the 5%, particularly for the guarantee scheme. You have to show genuine savings. So 3 months of you actually saving that money or having held that money in that account in particular. And then we apply for pre-approval. Normally it's a pretty quick process. I can have something turned around pretty fast. But at the same time, if you're not ready, we can do it in a few weeks. Like it's not a rush.
Yeah. Amazing. In the same account, so you can't be moving money between accounts? Is that?
Yes and no. If you can prove that it's still gone from your account. I know there's been a bit going on TikTok from other brokers, and it's not dissing anyone or anything like that. But as long as you can see that it's their money and they've saved it and it's,
that's fine.
It's regular. It's fine.
Yeah. Okay. Because I've got money all over the place.
Me too.
I've got so many accounts.
My savings are like all, divided into all sorts of things. But yeah, as long as we can prove it's
in your name.
Yeah.
Yeah.
It's
okay.
all good.
Yeah, I think it would be so much easier if I just have one bank account to be like, here it is. But no, mine's all over the place.
There's also some lenders take genuine savings. So say you have like a lump sum for whatever reason, if it was like a tax return or a payout from something, if you can show like a rental ledger, that actually counts as genuine savings.
Okay.
Because you've regularly paid that money and put it away technically.
Yeah, that's good.
Yeah.
So people are like, oh, renting doesn't help you get a home at all.
No,
but
it actually does. Yeah. So some lenders will take that as like the genuine savings.
Amazing.
Yeah. You still need to have the funds, but that just proves that you can save that amount.
Yeah, you have been saving.
Yeah.
Okay, so we find our property, we've got our pre-approval, and then we come back to you and we say we're ready. Yeah,
so we get pre-approval sorted. I would then introduce to the conveyancer and leave you on your home buying journey. Amazing. I do like to be involved though. I say to my clients, like, send me the properties you're looking at. And that's because I just love looking at houses. And there's nothing else to that besides like, oh, show me what you'd love to buy.
Yeah.
And then once they've got a successful offer or like an offer accepted on the property, it would come back to me, and then I send it off to the bank and do valuations and get everything sorted for formal approval. And then we just wait till settlement.
Amazing.
Yeah.
Settlement's so random. It feels like
it is
interesting. And they're like, here's this date that we're going to hand over your property secretly. And then they just text you and be like, it's done.
It's done. Yeah.
Yeah.
It's a bit like anticlimactic almost. Like you're like, oh my God, all my money's going to this purchase today. And then they're like, okay, cool.
Yeah, I had to go and get a check from the bank. I was like, this is really odd. Yeah. Walking around with my like $50,000 check being like, this is so much pressure. Yeah.
That's stressful.
Yeah. I was just going next door to like the solicitor. Yeah. But I was like,
that is
just
stressful.
Like withdrawn it with my debit card. Like crazy.
That's weird.
Yeah.
Now we I would say most lenders use something called PEXA, and it's like it's called a workspace, and it's where the bank talks to the solicitors and they talk to also like who you're buying from, and it all just like gets sorted out magically. You'll have to get a conveyancer on because I don't know how it all works actually on settlement. But yeah, it's all through this thing called PEXA, and then I normally get notified like 20 minutes later.
Yeah, I remember there was like a PEXA fee.
Yes. Yeah, about $300.
Yeah, I don't remember. So many extra fees.
Yeah. But that's all accounted for in like the $5,000 that I do allow for extra purchase costs.
Amazing.
Yeah.
Big question.
Yeah.
Redraw versus offset.
Yes.
Some people say offsets are a scam. Some people say redraws are a scam.
Yeah. Good question.
Thoughts?
I don't think they're a scam.
No.
At all. Okay, so an offset account literally does what it sounds like. It offsets the interest payable on your home loan For example, you have a $500,000 home loan, you have $10,000 sitting in your offset account, you are paying interest on $490,000 of your home loan instead of the $500,000.
Mm-hmm.
So offsets are great in that instance, but they're also really good tools for money management. So if you get all your pay going in there, if you're, say, have bought this property with your partner, you have all of your money sitting in there as like a little hub and then have your bills and expenses coming out of it. It's just a really good way to manage your money. And it also then benefits you because interest is calculated daily on your home loan, but it's charged monthly.
Yeah.
Which is a bit confusing, but it just means that if you've got like a bit of money going in and out of there every month, it does quite impact your interest payable over your whole loan term.
Yeah, definitely. I know some people struggle with mixing it all together. So it's okay if you do want to separate it out.
Absolutely.
Because when you're spending like $100 out of $10,000, it doesn't seem like a lot. So it's pretty easy to like just get a bit distracted by it. So definitely feel like you can separate it out. But
absolutely.
It is like such a good benefit.
Yes. And there are lots of, or it depends on the lender, but some random one bank lets you have 99 offset accounts, but then others only let you have one. So it depends on what you want to do, but definitely ask your mortgage broker about that if you did want, say, separate offset accounts for different things, but they all would just generally offset the one home loan.
Yeah, I think some people say online that offsets are bad because some people do get distracted and kind of spend a bit more, kind of like you do with credit cards.
Yeah.
But I think with redraws, wasn't it during COVID, some banks didn't let you actually take your money back out?
Yes, I did hear that. Some banks do have a minimum on the redraw too, so you might only be able to take out a minimum of $500. Some do, some don't. It's very dependent. But another thing to consider with an offset account is most come with like an annual fee or their interest rates are slightly higher than if you don't have an offset account.
Oh, interesting.
Yeah. So that's not with all lenders, but quite a few have that. So you'd need to consider like actually the impact of having the slightly higher interest rate, how much money you would have sitting in your offset account, because for some people, they might have $5,000 once they purchase their home. You know, a lot of people do spend a big chunk of their savings buying, so they don't necessarily have a lot left over after. So you need to consider like, does it actually weigh up? And then also the cost, the annual fee.
Yeah, interesting. Because I don't have an offset yet because my mortgage is still fixed and doesn't come with one.
Yes.
Yeah, so I'm excited to get one next year.
Yeah.
But yeah, definitely something to consider if people are like, oh, maybe I won't get an offset initially and maybe I'll refinance in 2 or 3 years or something.
Absolutely. And the other thing too is it has to be a variable interest rate to have an offset account as well.
So you definitely can't get them with any fixed ones?
Some lenders will allow you to have part of it like offset, or you can have part of it have like redraw. Yeah. But ideally it's a variable rate to have an offset.
Yeah. I'm sure people find this episode so helpful. Before we wrap it up, how much are mortgage brokers? Is it true that most of them are free?
Yeah, great question. So most mortgage brokers are free, and that is probably more dependent on the type of loans that they're doing. For everything that I do, there is no cost to the client, and that is because we are paid a percentage of the loan from the lender as an upfront commission, and then we also get a trail commission paid out monthly.
Amazing. Is it the same for every bank?
No, every bank is different, but it ranges between 0.6 to 0.718%. It's very confusing, and it's very similar across the amount. And it also then is dependent on how much is actually sitting in, if there's an offset account, 2 weeks post-settlement. So if someone has, say, 20 grand in their offset account post-settlement, we get paid on the loan amount minus the offset.
Oh, interesting.
Yeah.
Crazy.
Yeah, crazy.
So you've got to hope people don't transfer to the offset too quickly.
That's okay. If that's what people need to do, that's not an issue.
Yeah.
But yeah, it's pretty cool.
Okay, so if you want to help your mortgage broker, don't put money in there straight away.
No, we're not allowed to say that at all.
Interesting.
Yeah, but then it's also a really interesting industry because we get something called clawbacks.
Yes, I've heard of that. Explain those to people who don't know.
So a clawback is so it's basically where our money, so our hardworking money gets taken back by the lender. You get 100% of the commission clawed back if something happens within the first 12 months of the home loan, whether your client sells their property, refinances, goes to another broker, anything like that. And then it's lender dependent, but either between 12 and 18 months or 12 and 24 months, you get 50% of the commission clawed back.
Yeah, crazy.
Yeah.
So you do have a big savings account waiting for that to happen?
Yeah.
Does that happen often?
It can happen. And I have a few like actual purposeful clawbacks coming up. So they're people where I have refinanced them to cash out so that they have a deposit to buy their next property.
Okay.
So then it kind of all works out in the scheme of things because their new loan is then higher or a higher value than what their first loan was. So there's some that I do have planned coming up that I just know I need to have money aside for. But yeah.
So you've got to be a good mortgage broker so they keep coming back to you.
Yes, ideally.
I've heard that not all mortgage brokers can refer to or like work with all banks. It's something called the lenders panel or something.
Yeah, correct.
That's interesting.
Yeah. So that depends on your aggregator. So mine is one of the bigger ones. So I have a lot of lenders on my panel.
What's an aggregator? People haven't heard of that.
Oh, a good question. So the aggregator is basically the overarching body that I have to abide by, like their compliance. They are the ones that allow me to lend and like actually have that connection with the lenders. I think it's 42 lenders on my panel now.
Okay. How many are there in total?
Oh, good question. There's a lot, particularly once you go down like the private lending way. And if you include asset finance and like deposit bonds, there's quite a lot, but I just deal with mortgages. So I have nearly all the like big lenders.
Do you have all the big 4 banks?
Yes, all of them. Not all mortgage brokers can actually have them all. You have to have completed your diploma to actually get most of the big 4.
Interesting. And people can be a mortgage broker just for the cert for?
Absolutely. But you have to work for someone else.
Okay.
Yeah. If you work for yourself, you need the diploma.
Do you tell people your lenders panel if they ask?
Yeah, absolutely.
Yeah, okay. Yeah. So that's definitely something to add to your list of questions.
Yeah, absolutely. I have all the main ones, particularly like with the guarantee scheme, like that's who I deal with a lot. And I have all of the scheme lenders.
Amazing.
Yeah.
I know some people are skeptical with commission-based things and they're like, oh, well, will a mortgage broker give me a worse deal because they want more commission? Do you think people actually do that?
Yes, I think people do. And this also probably goes back to what we were talking about before with just because a bank will lend you a certain amount doesn't mean you should. And I always say to clients, like me telling you that you can't lend that much means I don't get paid as much.
Yeah.
And that kind of sounds a bit counterintuitive a bit, but I'm like, I'm not out here to be ripping people off and putting them in major debt. Like I want people to have, you know, like I said before, a good lifestyle, be able to afford it. But then, yeah, that also impacts how much I earn because they're not borrowing their most.
The max amount.
Yeah.
Yeah, it's kind of scary.
Yeah.
Do you think it's fine for people to go and do like a few intro calls with a few different brokers?
Absolutely. You need to see who you can get along with. I think it's really important that, you can, like, you respect them, they respect you.
They're listening.
They understand what your goals are and that, they want the best for you.
Yeah, and it's amazing to know that you do all the extra stuff as well so people know what things are going to cost them. So definitely like that's a fun feature to look out for.
Yeah, absolutely.
Amazing. Fun. This has been a great chat and so helpful, I'm sure, for so many people. If people want to come and chat to you, where can they find you?
They can find me on Instagram. My Instagram is Finance with Kobe, or my TikTok is my full name, Kobe Clarke-Jacobs.
You make some great TikToks.
Thank you. There's some funny ones out there. I'm not the most serious person on TikTok, but if that's what you like, then I'd love to chat.
It's good. And Kobe's going to join us for some fun stories, fun money dilemmas soon. So look out for that episode as well.
Thanks for having me.
Ooh.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invests or me at Ana Cristina.
This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info.